I literally just checked my bank account. I am so broke. And I don't know what I'm doing with my life. And I just paid for more gas.
Only $10.
That's a lot of money.
All right, people, I'm not sure if she was serious. Maybe she was joking. Maybe she was making fun of people that are broke. Who knows what's going on with social media nowadays. But let's get into the news, folks. A lot to talk about. Cost of living still going up. Most people still barely scraping by, living on credit cards. And we've got the debt situation today, another record in consumer debt. And we said right here on this channel this was likely to happen. They're just going to keep on extending the debt. We're not going to see a 2008 type of financial crisis or collapse until the credit cards get shut off, until the banks are on the verge of failure, which we know that's not likely to happen because the banks have been promised endless life support by the powers that be. So we know that this is more likely going to be an inflationary collapse, meaning the markets won't collapse, prices won't collapse, the housing market's not going to come crashing down. Prices may correct a little bit, but we're not going to see a crash. It's going to be this continuous slow motion grind into higher cost of living, people carrying more balances on their credit cards, people having to work harder just to get less. But we also have a spending problem, right? So we're going to get into all the numbers here, the inflation, the economy, jobs, how to invest, how to try to stay ahead of this financial curve. And we're going to hear from a few people on what they're going through and what I think might be the solution, but I'll let you chime in down in the comments. Please make sure you're subscribed. Let's go ahead and get started right here. That last one was Skyla Lynn, by the way, in case you want to go follow her. And let me know if she's serious or not. I think she's joking, but who knows the way people are putting content out there. We have people even crying on camera now because of their financial situation here. Let me just bring up this one here before we get into the news here. All right. And again, maybe some of these are jokes, people's sense of humor nowadays. But she looks to be crying and she put out this video. People are posting this on social media. If people are putting this out on social media and are willing to have everyone watch them, if she's really crying, willing to have everybody watch them cry, it's interesting. But then maybe she's joking. Take a look at this. My shift lead gave me food for my break because I'm broke. Okay, is she laughing? Or is she crying? Right here. Kind of looks like a laugh. Is she crying because she's so happy that her shift lead actually gave her food? She looks like she's really crying. She looks like she's really crying. Is it me? And some people will cry if somebody does something that's nice for them. Have you ever gotten a present and someone, made the nice gift gesture, or they really, cared about what you got. They thought about what you needed. Maybe it was a nice gift, and kind of get emotional, right? So I could see some of these people being for real in these videos, right? It's not all jokes. Maybe there are some pranks, but a lot of people are putting it out there, their struggles. And let's hear from somebody here that I think breaks it down very well on what's happening with the spending right now. People are just financing everything, vacations, even essentials like groceries. But people that could save money don't save money. Let's hear from a influencer here, or someone that just put out some content here.
Literally broke. I don't have no money saved in my bank account. I'm young and I cannot buy a house because I don't make enough money. I don't make enough money to buy a house, and I'm super broke. I don't have no money saved, and I work paycheck to paycheck to pay my rent. This is what people are saying on the internet. Okay, they're talking about how they don't have no money. Like it's so many young people who don't have no money, and I'm gonna tell you why. It's because we're overspending on other things. We're overspending. We're overdoing it. A lot of us is going out on trips, buying a lot of food, eating takeout all the time, paying for things that we should not be paying for, doing too much all the time.
Doing too much all the time, going on trips. Folks, this is what a society that lives off of credit looks like. Even broke people are out doing stuff because they just put it on credit. And that's why you see everything's still busy. The stores are busy, the amusement parks are busy. Record profits at some of these amusement parks. We're going to talk about that in a few minutes. But let's listen up with this video here. Let's finish it.
What happened to us, like, treating ourselves every blue moon? Like, treating ourselves has become a thing every single day. Every single day, young people are wanting to treat themselves with something. And that's the problem. We're overspending, boo. You're overspending. That's what it is. A lot of times, it's not people's rent. We're overspending. We're seeing the amount, we're paying the bills, and then we're like, oh, this leftover money, I could use it for something instead of saving. I seen this video. This girl was talking about how she don't have no money saved in her bank account but some change. And she showed her bank account. And then she has a credit card, $5,000 in debt off of a credit card. I don't even know how is that possible. Like, and she was young. Like, this is ridiculous. Like, I hate credit cards. I hate it because it's a setup, and you would never see me get no credit card.
It's a setup.
But no, I already got to pay school loans. I already got to pay them back. I'm not getting no more credit, nothing. Like, I'm not playing these games with the government. Like,
was it 50 million people with student loans, something like that? It's crazy.
Like, a lot of us young people, we use too much money. We look at leftover money and we think it's free, and it's not. It should be saved for a rainy day. It should be saved for emergencies. That's the problem. That's why we can't afford nothing. That's why we can't afford assets, and we only can afford a car payment and a house and the bills that come with the house, because we're not saving our money. We're not investing in anything. A car is not an asset. I don't know who is saying that on the internet, but that is nothing. When you have a car and it's new and you paid it off, it's still not an asset, honey. A house is
it's an asset. It's just a depreciating asset in most cases. But in some cases, like from 2020, prices started going up. Remember, car prices, even used cars, as they got older, prices were going up. So it's been crazy times over the past 5 years.
Asset, okay, but yeah, it's too much shopping going around with the millennials and the Gen Z. That's the problem with us.
All right, I get it. I mean, I think she's right. I can see millions of people feeling the same way as she does. Imagine if people couldn't just run up, swipe their credit cards and live off credit cards. Imagine how much worse the economy would be doing, right? Because debt, easy money, makes the economy function, right? But it also makes prices go up here. So let's talk about some other things here. We'll jump back into some more videos here in just a moment, but I wanted to talk about this. Speaking of people going out to eat, swiping credit cards, McDonald's sees sales rebound, but concerns about low-income consumers linger. So what McDonald's did is they went back to some of their value-priced items. They reported a recent quarterly earnings that topped analysts' expectations. The fast food giant also reported some same-store sales increased 3.8%. That's the chain's biggest jump in nearly 2 years. So just when you thought that people were no longer able to spend anymore, and people were cutting back, and places like McDonald's are going to see lower profits, well, things are still chugging along because the credit is still available, right? As long as credit's available, then things will continue to chug along. You'll see businesses fail here and there because there are people cutting back in some areas, but McDonald's, is this good news that McDonald's has seen a pickup in their sales, right? Or some people would look at it and say it's going to be more coronary artery disease. But financially, if you're invested in this, maybe that's good news. But let's take a look at the stock. What's going on with McDonald's stock? All right, we're looking at a 1 year chart here. Let me zoom in a little bit for you. Or zoom out in this case. $307 right around there right now. Up 13.5% in the past year. However, though, it's not really too exciting. If you would have bought at one of the peaks, like you may have bought at 321 back here in March of this year, and now you're at 307. So unless you bought at the right time, if you bought right at a year ago, you're up about 13%. Nothing to get too excited about. Let's look at a 5-year chart. Go all the way back to August 2020, a little over $200. So you went from 207 to about 307. So it's at a 30% gain in 5 years. Nothing to get too excited about. So even these companies that are consumer staples and that are always going to be around, like McDonald's, it's really not too hot of an investment unless you're just in the long game where you just want to invest in something, have about a 10 to 20, 30% increase over 5 years. Maybe that's enough to get you by. Nothing that really gets me excited though. I've had investments here over the past year or two where it's been up 100, 200, 300%. Why? Because I only typically go heavy into the buying of a stock or an asset if there's a big sell-off. In other words, buy the dips. That's just what I do. It's worked pretty well for me. I've got some stocks that I did that with that have tripled, quadrupled even in just a few weeks, in a few months in some cases. But some people just like to sit in a stock, and 10% per year is a fine gain for them. Me, that's not the way I invest. Well, I shouldn't say that. I do have some long-term investments. My retirement account is like that. I did move a big portion of that into a fixed income type of thing, a money market, just to be cautious. And that way, when there is a big drop in the overall markets, I'll have money to go in and buy that, hopefully a big dip. But a lot of people just don't have money to invest. And that's the problem with, I think, so many people right now. They're just barely scraping by, living paycheck to paycheck. And that's why I started integrating some of these videos from people putting their financial situation out there. Like when we saw somebody crying over their boss gave them a sandwich, people crying over gas. Let's give you a couple more here before we move on to the other news I wanted to get into. And let's talk about what's happening with teachers and their incomes. We've seen some school districts.
Pay rent with my salary.
I apologize. We've seen some school districts have had to build housing for their teachers because the teachers couldn't afford to live in the area, and some of them were commuting an hour, 2 hours each way to get to work. Crazy. Take a listen to this. Teacher.
Hey, Raph, I'm a teacher and I can barely afford to pay rent with my salary. My salary bi-weekly is basically my rent minus $500. Guess how much my car is? $400. Guess how much insurance is? $100. Oh, yeah, that's right. You do the math. I'm left with owing money at the end of the month. That's not even with groceries. Holy that's not even with groceries. I realize every single month I am
She's just now realizing it on camera. She realizes that she's broke paying all her bills, which doesn't even include groceries. So her salary's gone, her paycheck's gone, and she still hasn't bought groceries. All right.
transferring money out of savings into my checking, and I am not. Just had the realization in the car that I'm actually going to go into debt if I continue.
She's a teacher. She's just now realizing on camera that she's in financial trouble. This is crazy.
Being a teacher. Like, genuinely. Wow. Oh, I'm like literally having a crisis right now. I'm gonna have a panic attack right now. I can't do this. I literally cannot do this. Knowing every single month that most of my money is literally, like, I don't have money. Okay. I don't know how I'm gonna pay off my credit card this month. I don't know. All right, well, rats, peace and blessings, and I hope you can afford your rent today.
This is what people are doing, folks. They're putting this out for millions of people to watch.
And groceries, and your car, and
possibly,
insurance, and life.
Possibly make fun of them. So that just shows you, I think, how is the word desperate appropriate here? I just don't think people really have friends to talk to these things about. Maybe some do, but why else would you put this out on social media? By the way, maybe go check some of these people out. Don't give them a hard time. Don't bust their chops. Be supportive. Be nice. A lot of these people are younger, and they've inherited a world, or I should say, they've entered a world that is different. If you're 35 plus right now, when you were younger, things were a little less crazy, a little more affordable. Somebody that's 35 and under right now, younger than that, you came into the world, and by the time you became an adult, things were crazy expensive, unlike over the 90s, the 80s, the 70s, where you could get by and buy a home just on one salary. It's crazy what's happening right now. That last one, by the way, the screen name was Lexi Fearment, in case you wanted to go leave a comment on her account. All right, but back to investing and earnings. for just a moment here. Uber stock falls despite second quarter sales beat $20 billion stock buyback plan. So once they start buying back the stock, then maybe it'll start going up. But take a look at what's happening with Uber stock here. And we're going to start off with a 1-year chart. Again, nothing too exciting, kind of like McDonald's. Just kind of choppy, bouncing up and down. Overall, you are up, though, if you bought exactly a year ago. We're coming in at just over $88. And you would have been getting in at about $65. 5-year chart, a little bit more pronounced here. $32 back in 2020. And now we're at 88. So you more than doubled your money. Going to be tripling your money if you've held that stock. But that's, again, if you bought at the low point. If you bought at one of the peaks, you might still be up a little bit. But depending on where you bought, you may not be up. So these are more long-term plays as far as the investment game, in my opinion. I don't hold Uber stock or McDonald's. I typically look for bigger volatility. I look for a huge drop in the market, like the one we saw was back in March. All the markets came down because of the tariffs and the expectation of higher prices. Well, prices have recovered and stocks went on to new all-time highs in most indices, actually. And I like to look at the S&P 500. Make it a little larger for you here. So yeah, new all-time highs here. And here's a 5-year chart. You could see the peak previously back in February of this year. We saw that March sell-off into April. And now we're above where we were at that last peak before the sell-off. So the last peak mid-February. Just looking back at the last few days, we're slightly down from that all-time high, but you can see from a long-term perspective, we're at or near the all-time high in that particular index here. All right, but new warnings out there for more price inflation headed towards us here. Americans could soon face higher inflation as businesses pass along tariff costs. And that's coming out of the Fed, folks. So businesses now, they've burned through that inventory that they loaded up on at the beginning of the year when they knew the tariffs were coming. And now they're going to have to pay these higher prices, pay the higher costs of the imports and the tariffs, and that's going to be passed along to the customer. So in my opinion, we haven't seen anything yet as far as inflation. It's going to get worse. There may be a couple pockets of relief here and there, but prices are still going to go up overall, in my opinion. Take a look at what's happening with car prices, cars and trucks. Look at this, folks. Manheim Used Vehicle Index going all the way back about 10 years, going back to about 2015. Of course, if you look at the cursor where I'm at now, prices shot up in 2020. People thought prices were going to crash back down to where they were before 2020. Hasn't happened, folks. They came down. Prices came down a bit. Look at this. Over a year now, prices have been creeping back up. Right? No crash, no price correction, no deflation. Just a bit of a correction, but then prices creeping back up. People are still able to finance what they can't afford. And that's why prices are going to continue to go up. This is all driven by borrowed money and banks, right? And once you realize that, then it's going to be a lot easier for you to invest and for you to make money. But yet, with all this happening, with more inflation headed towards us, people broke, crying on camera, if they were serious, we have this consumer confidence, a small rise. I don't really put much weight into these consumer confidence surveys. It depends on who they survey and who's collecting the data. And it depends on what the questions are, right? So just because something's less bad than it was before, some of these surveys put that out there as, oh, the consumers are confident. They're less worried than they were before, even though they're still worried. Even though they're still crying on camera, they're not crying as hard. So that means consumer confidence is rising. I could say that consumers are confident that prices are going to go up higher, unless they just don't know, unless they don't really look at these things. But consumer confidence, let me know what you think. I think it's a fun thing to look at, but again, I don't put too much weight into the consumer confidence surveys and numbers that come out. Look at the debt levels, folks. Household debt rises to $18.4 trillion as auto and mortgage originations tick up. So debt is still climbing, and this is why you still see prices rising, because if people can borrow money, prices will still be elevated and continue to rise for the most part. It's when there's a banking crisis, people can't borrow money. The banks, they pull back on the lending. They're more restrictive on who gets the credit cards, and the higher credit limits, the higher credit lines. That's when the economy really starts to tumble. But until that happens, and who knows, it may never happen the way things are going, it's just going to be continuous inflation, rising prices. So brace for it, invest for it, keep stacking and get ready, folks. Let me know what you think down in the comments. Deuces, big love, bye for now. Peace.